Hello everyone, welcome to today's lecture. So today we are going to cover the second part and second unit of peer review and quality review, that is quality review. In last lecture we discussed quality review. I'll suggest if anyone has any doubt with respect to the anyone has any doubt with respect to the peer review of the last lecture, they can ask over here. I will be taking up those doubt also. With respect to the quality review, we will be starting the lecture now. Okay. So how will I proceed is, again, with respect to the quality review, I'll explain you the quality review. I'll go to the deep in the provisions. I'll show you one of the amendment which is there in the quality review, and I'll show you the live report also of the quality review with some questions. Okay. Okay. So most of you might be wondering what is the difference between peer review and quality review. Okay. Quality review focuses upon the whether the statutory auditor has ensured the compliance with applicable technical standards which are there, whether he has ensured the compliance with relevant laws and regulations, whether applicable quality control standards have been complied with, whether there has been any material misstatement in the assets or liability for which he has done the audit. The main difference which I can say with respect to the quality review and peer review is, in case of a quality review, if an issue has been identified, then the quality review board can refer the matter to the disciplinary directorate or disciplinary committee for further actions, which was not there in the peer review. So peer review was to enhance the quality, not to identify deficiencies. However, with respect to the quality review, it's other way around. Okay, so that's the main thing with respect to the difference between quality review and the peer review. I'll explain you in further detail. Now, when I talk about quality review, basically, okay, we talk about quality. Our prime focus is on quality. However, if you see peer review also, there also we were talking about quality. So on the both places, we are focusing more on the quality. Okay. Now, how do you define the quality, term quality? Like, how do you ensure that the firm that is there under the peer review is ensuring the quality? So there are certain things and parameters that are being referred to when we talk about quality review. So first one is whether the stat auditor has ensured compliance with applicable technical standards in India, and other applicable professional and ethical standards. So whether the stat auditor has ensured the compliance of technical standards, professional standards, and ethical standards. You can say that in other words. Okay. Plus, we are required to see whether the statutory auditor has ensured compliance with relevant laws and regulations. Required under applicable auditing standards. So, laws and regulations, compliance with laws and regulations and auditing standards. The second area. The third area that we are required to look is whether the audit firm has implemented a system of quality control okay, with reference to the applicable quality control standards. Now you tell me guys, which are the applicable quality control standards for an audit firm? Which are the applicable quality control standards for an audit firm? Which are the applicable quality control standards for an audit firm? Correct, Venkatesh Subramaniam. Come on guys, pretty easy. Which are the applicable quality control standards for an firm? I'm specifically focusing on quality control standards. See, which are the quality control standards? SA 220 plus SQC 1. These are the two quality control standards. Okay, applicable quality control standards with respect to an audit firm. Then next point that is we are required to see for an quality control point of view will be we will be examining whether there is no material misstatement of asset and liability as at the date of reporting in respect to the selected entity. Okay, so material misstatement with respect to asset and liabilities. Okay, so here the major focus of the reviews is on the compliance with the technical standards. Okay, laws and regulations as required under the applicable auditing standard, quality of reporting, and firm's quality of your control framework. Means what is the firm's quality with respect to the control framework? That is the major focus area. Now the quality reviews for any particular class or class of audit firms are defined by the board, and these entities are selected by the board. Okay, however, the entity which is selected as in for quality review is known as AFUR, audit firm under review. Usually we will be using this term a lot frequently, that is AFUR, audit firm under review. Okay, now so audit firm under review, the review usually covers working papers of the selected audit files. Same on the as a peer review, it's there. They assess the quality of their audit to ensure that the financial statement again are free from material misstatements. They are giving a true and fair view. Internal quality controls which are placed within the AFUR are approved. I'm really sorry. Okay. The quality controls placed within the AFUR, that is the audit firm under review. Okay, including the assessment with respect to their internal controls of quality areas. Okay, SQC1 defines some areas. Okay, so whether that is appropriate or not, AFUR's independence and compliance with the technical, professional, and ethical standards, all these things are reviewed under the your quality review. Along with that, for the sample selected, the reviewer might visit on site and they discuss the findings with the management. We'll see all that in detail, but just to give you a glimpse about the quality review process, it's on the same line as the peer review. Okay, now I want to show you guys the real quality review report that I obtained. Okay, that's available online also, a summary, but I'll show you how the quality review report is there, who issues the quality review report, and how the matters are enumerated in that. So this is the quality review report of 21-22, which has been issued by Quality Review Board. Over here, you can check on their website of Quality Review Board, that is there, QRBAC @QRBAC.in. Then, so a lot of details are given. These are the current nominees from central government on the QRB board. This is the nominees from ICI, members, special advisories, and secretaries to the board. Now, I'll talk about the constitution of the QAR board, QRB. Okay, so the QRB board basically, how it is constituted is there are total 11 members on the board. Okay, there are total 11 members on the board, out of which out of which 6 are selected by central government. As you can see, nominees of the central government. 6 are selected by central government, including chairman. 5 are elected by nominees of Council of ICAI. Okay. 5 are nominees of ICAI, and accordingly they select their composition. Okay, so I'll write it here. Quality Review Board is defined under Section 28A of Chartered Accountants Act. Wherein, as I said, there are total 11 members, including chairman. Okay, or chairperson. So if you see, chairperson plus 10 will be the total member count for a board. Now, how it is bifurcated is chairperson plus other 5 members that is total 6 are elected by or appointed by central government, whereas rest 5 are appointed by council. Okay, now these member can be nominated amongst the persons having good experience in field of law, economics, business, finance, that is there. So that can be there, but 5 members including chairperson appointed by the central government, 5 members by council. So that is the constitution we are seeing over here. There can be special invitees, there can be a secretary appointed to the board, that is fine. But this is how the work is, allocation is. Okay. I'll come to the approach and conduct. I'll just show you before that what is it, quality reviews performed and what are the, identifications. See, overall trend of the audit engagement reviewed for FY 12-13 to FY 2021. So they're talking about the reviews that has been performed, number of observations. Okay, then what is said is, if you see, now under quality review, if any significant issue has been identified where significant improvement required, they may refer case to the ICAI council for further actions. Either they advisory can be issued by the QRB to the audit firms, and if there is nothing, then they will close the matter. So where improvement is required, they will generally issue advisory, and if it is generally acceptable, like no observation, then the case is closed. So what they are saying is they reviewed 24 audit files. That is 23 entities were covered, different entities were covered, 1 listed, 1 PIE, and 21 private limited companies for 22 audit firms. Okay. Now they will tell you about the observations on standards on auditing. like which standards on auditing was having higher observations, like which is the more critical one, where is a miss. So all those details are there in with respect to the Ind AS. So Indian accounting standards, like what is a miss with respect to the AS, what is a miss, where is a major observation. Plus they will provide the detailed analysis of their, like let's say for example, standards on auditing, standards on quality control. So they will provide what is the focus area which was identified during the quality review. Okay, like let's say for example, whether the audit firm establishes and implements policy and procedures of all the elements of system of quality control, whether the audit firm obtains at least annually a confirmation letter concerning compliance with the policies and procedures for maintenance of independence from all persons required to maintain independence. So these were some areas which were identified by them. Let's say for example, this one, not documenting its policies and procedures on each element of quality control that should also be sufficiently comprehensive and suitably designed in relation to the firm's size, nature, and complexity of firm practice. This was with SQC1. Then you can have this one, not establishing procedures to assess staff's capability and competence. Then you have 220 for SA 220. Then you have a SA 250. So different essays, they will provide you what are the details, what are the observations they have identified. Same way they will provide you the observations with respect to the accounting standards, what was missed, what was not there. Same way for the Ind AS, whether any disclosure is issue or missing, or whatever the the relevant findings will be there. Then with relevant to other laws and regulations, Schedule 3. Okay, balance sheet related disclosures, Division 1, Division 2 with respect to the CARO. Okay, if any other issues are there, then they provide the key takeaway in their report. And they provide a summary, okay, of all the observations. So this is how the quality review report looks like. And this is a summary of all the quality reviews performed, a report on audit quality review. Just to show you a glimpse that how it is, the issues are identified, issues are listed over here. And when I talk about, quality review with respect to the technical, professional, and ethical standards with respect to other areas, this is how they enumerate. Any doubts till now? Any doubts? So chairperson is appointed by central government. So chairperson is part of the central government. If I show you over here, chairperson is something appointed by from the nominees of central government. Any doubt till now, guys? Any doubt? Okay. So that was the constitution and the review that the quality review board performs. Now there are certain functions that the quality review board has to do along with these quality reviews, but there are some certain functions which are defined and they need to perform those functions. So now I'll talk about functions of quality review board. Okay, very important reason, because this defines what they need to perform as an under quality review and everything. So that's a critical area, and we have an amendment here in this area also. Okay, so the function of the quality review board. The prime function for the quality review board is to carry the quality reviews. Okay, and to direct the quality reviews, inspections and evaluations of the audit for the audit quality, and adherence to the various statutory requirements, regulatory requirements, all other quality control standards and NDAS, AS, everything. Now that involves inspection and assessment of the work that the audit firms under review perform, or the practitioner performs, okay, while carrying out their audit functions. So to perform all these, the functions of the quality review board are that the quality of the compliance with accounting standard and disclosure requirement followed by the entity, on which the audit is, audit report is issued, is appropriate or not. So they need to assess that. They need to identify that whether that's the quality is appropriate or not. So to assess the quality of compliance with respect to the accounting standards, disclosures, okay, NDAS followed by entity. When I talk about entity, like I'm talking about the entity for which the audit has been conducted, okay, on which the audit report is issued. So I'm talking about the entity whose audit was done. So what we are saying is, a quality review board will assess the quality of the compliance with respect to the NDAS, AS disclosures followed by the entity. Okay. Second, they will assess the quality of the audit reporting by practitioner. And the quality of framework adopted by practitioner. Okay, in conducting audit. So that will be the second area, to assess the quality of audit reporting by the practitioner, and the quality of the framework adopted by the practitioner for conducting audit. Now, what is the framework that the practitioner use is required to adopt to conduct the audit? So what is the framework? Which framework I'm talking about over here? Here, like quality of the framework adopted by the practitioner. Which framework I'm referring to here? Which framework I'm referring to? Quality of the framework adopted by practitioner in conducting audit. What is the framework that a firm adopts or uses to conduct the audit? Come on, guys. I'm talking about the framework adopted by practitioner in conducting the audit. Which is that? Okay, Boni. Okay, Kaushiki. Correct, Sandhya. Correct, Manani. Venkata, near to that, but there is some more to that. So the framework are not the frameworks are like your essay, SQCs, okay, and other standards, engagement, your engagement and quality control standards. So these are the standards that a firm adopts, frameworks that the firm adopts to conduct the audit. SA, SQC, SAE, SRS, all these standards. So in nutshell, I can write engagement and quality control standards or auditing standards on auditing, you say. Okay, this is the framework I am talking about for the audit. For the financial reporting, if you talk about the framework, that framework is a financial reporting framework, then it may be schedule 3 or something like that. But when I talk about auditing framework, that is engagement quality control standards. So when I use the word practitioner, AFUR, they are common. They are the same. Okay. Now, usually these are the functions of the QARB board, but there are some additional functions which are listed under section 28B. So there are functions which are listed under section 28B over and above these functions, or in addition to these functions, you can say. Those are to make recommendations to the council with respect to the quality of the service provided by the members. With respect to the quality of service provided by the members of institute. Then review the quality of service provided by the members of the institute. including auditing service, then to guide the members of the institute to improve the quality of service, to guide the members of institute okay, to improve the quality of their service, and adherence to various statutory and other regulatory standards or requirements. Okay. Now there is an amendment to this particular time to section 28. So the amendment has added additional a function, or you can say a responsibility upon the board, quality review board, under section 28B, and that goes that to forward cases of non-compliance, okay, to forward cases of non-compliance with various statutory and regulatory requirements by the members of institute noticed during the course of its review, okay, to the disciplinary directorate for its examination. Means from now onwards, after this amendment, if there is any non-compliance with respect to any of the statute or any of the provision of any regulatory requirement that was identified during the quality review board, the same will be forwarded to the directorate for further examination and for further investigation, wherein appropriate action can also be taken upon that firm, okay, based on the disciplinary proceedings and the procedure that is there. So that is amendment. This amendment was issued through the recent what you can say act which was passed, that is Chartered Accountant, the Cost and Works Accountant and Company Secretary Amendment Act 2022. This was, I think, passed on 18th April. So this was 18th April 2022 when this act was passed. CA, Cost and Works Accountant and Company CS Act, Amendment Act. Okay. So under this, this 28B was amended and this particular function was added. Any doubt till now? Any doubt? Okay. Now, we saw that quality review board will cover some of the entities for the quality review that is there. They will select the audit firms under review, and they will pick the samples for the quality review. So QRB will generally pick the audit firms. Okay, QRB will assess the quality of AFUR, which are under the firms can be which are will be covered. That is there. We'll see the guidelines how the firms are covered. Okay, then their audits will be taken as samples for review. Now these audits can be audit of corporate entity, means company, audit of non-corp entity, NCE. They can be two type of audits, for the samples that are selected. Now, with respect to the audit of corporate entities, there are certain entities. I'm talking about entities / audits which QRB cannot cover. Okay. Now there are certain entities and audits which QRB cannot cover. You can say exclusion from the QRB. And this exclusion is with respect to the NFRA. So there are certain entities which are already covered by NFRA, okay, for their review, for monitoring and enforcing compliance of accounting standards, auditing standards, overseeing the quality of service, everything. So these entities are covered by NFRA review. And if you see NFRA review, so NFRA has prescribed under Rule 3.1 Rule 3.1 of NFRA rules. Okay. Which has enumerated certain entities which will be covered by NFRA, not QRB. So let us see which are these entities. First, companies listed on any stock exchange, India or outside India. So listed companies. Unlisted companies, but unlisted public companies, I should be saying. Unlisted public companies, but having paid up share capital, okay, greater than rupees 500 crores, turnover greater than rupees 1000 crores, and aggregate outstanding loans, debenture, deposits as on 31st March of immediately preceding year. So I can say debt greater than rupees 500 crores. If these three conditions are there, then that will be also covered by NFRA. Insurance, banking, electricity, banking, electricity, or companies governed by any special act. Those companies will be, will fall part of NFRA review. Then body corporate, which has been, which is in a public interest entity. So any body corporate, company, person, or class of body corporates or persons, reference which is made by authority to the authority by central government. So central government making reference to NFRA for any entity. That entity will be covered by NFRA, not QRB. Then subsidiary or associate of above. Or any company, any subsidiary which has net worth or income, or associates which has a net worth or income exceeding 20% of the consolidated income, then that will be covered. So subsidiary and associate of above if material. Now, how can I define material? Material means that income or net worth of that subsidiary / associate shall be greater than 20% of consol income or net worth. Then it will be covered, otherwise not. So if the subsidiary or associate of above is material, then only it will be covered by NFRA. For non-corporate entities, there is no restriction. So accordingly, and if these cases will be covered by the NFRA for their review. Clear? Any doubt with respect to these cases? So yeah, when I say deposit means deposit accepted, correct? Any doubt? Okay. If no doubt, let me cover a question. So now I will be covering something initially. I'll explain you in detail later. The technical reviewer, you can say the reviewer under quality review board. So that those that are talking about the technical reviewer. Okay. So technical reviewer means the reviewer under quality review, appointed by quality reviewer board. So the technical reviewer selected the following engagement of ABC and company, okay, for quality review. Internal audit of XYZ Limited listed entity, internal audit of PQR Private Limited, tax audit of ANZ Private Limited, tax audit of Mr. P, statutory audit of ANZ Private Limited, then IND-AS 115 implementation advisory service for EMEA Limited Private Limited. Okay, so these are the engagements which are selected by the reviewer for quality review. Okay, the firm, that is ABC and company, has the contention or contended that the samples selected by technical reviewer are not eligible to be selected under quality review. So you need to guide the technical reviewer with correct sample selection. Now you tell me, under this particular example, which audits can be selected and which audits cannot be selected. So you need to tell me which audits can be selected and which audits cannot be selected for the quality review. Sandhya, can you be more specific with respect to the second type of services? Correct, Boni? Okay, good. Kaushiki? Correct, Manini? Come on, guys, pretty easy. Okay. So when I talk about audits being selected for the quality review, generally it will not include it will not include internal audits, irrespective of it's a listed entity or not. So internal audits will not be selected, should not be selected. Again, tax audits are not part of the quality review. Advisory assignments are also not part of the quality review. Only statutory audit will be covered. So, in other words, if there is a non audit service, that will not be covered. Okay, internal audits not covered, tax audit will not be covered, GST audit and other special purpose audits that are conducted by the members of institute are also not covered. Services provided by members of the institute in employment will not be covered. So these are the areas which are not covered under the quality review. Only statutory audit of the companies, and in that also there is an exclusion for the companies that we saw. Those are only covered. So there's a good question. Can a single firm, audit firm under review, be reviewed simultaneously by NFRA and by quality review board? That depends upon the engagement that they are selecting. If an engagement of a that particular AFUR is selected by NFRA, then the same engagement cannot be selected. The same entity cannot be selected by the quality review board. Yes, but for a different entity being audited by the same firm, that can be done. Okay, so yes, a firm can be selected, but the engagement should not be same. Clear? Okay, I'll come back to the quality review. Now I'll come on the selection criteria, basically how the audit firm under review are selected. Okay, we need to understand the coverage of the quality. We saw the coverage of the quality review. Now we need to understand the selection of AFUR. Okay, now I'll talk about selection of AFUR. We saw that it's audit firm under review. Now we'll see how they are basically selected. So AFUR or firms or those are selected. They are selected on basis of some criteria. So the criteria is that the selection of the audit firm should be made should also be made for the quality review based on their statutory audit work. Okay, it can be on random basis, it can be on the basis of the volume of work handled by them, it can be on the basis of the number and nature of the clients they are handling, it can be on the basis of the sectors. So there are certain risk criteria for selection uh, risk criteria for the selection of entities plus risk criteria for the selection of the firm. So the risk criteria are, let's say, concern or risk, regulatory risk, then accounts being part of sector that are identified to high risk area based on the market. You can say they have a market risk. Then fraud has been reported. Serious accounting irregularities has been noted. And noted, when I say noted can be in other reports, in media, outside generally. So that is the case. Major non-compliance has been reported by any authority. Okay, so these are the there. Then in case of, there can be a case of reference made by regulatory authority. That is the risk criteria. The another criteria for the selection, okay, for quality review cycle, that is cycle based criteria for firms or AFUR. So this cycle based criteria is applicable to the firms, and on the basis of this entity is selected for the quality review. Okay, now under the cycle based criteria, what is the scenario is that the following firms will be covered under quality review in so many years. So firms / AFUR to be covered in quality review. Okay, so first, let's say firms having 20 or more partners 20 or more. So these firms will be covered once in 3 years. Then we have a partners 10 or more but less than 20. So partners are greater than 10 but less than 20. Those will be covered under once in 4 years. And partners less than 10, that will be covered once in 5 years. That is a cycle based selection. Okay. Now for these cycle based, up to 3 audit engagement can often AFUR may be selected by a board during an audit cycle. So once I have selected the entity, once I have this particular entity, then what I will do is up to 3 engagement of these entities, I will select for AFUR. Not more than 3, but I'll select only 3 and 3 samples for that AFUR in a cycle, in a particular quality review cycle. Okay. Now cycle can be, 1 selection, 2 selection, annual, like annually for an annual cycle. Okay, I can select up to 3. And in that also, if there is no adverse finding, if there are no adverse findings, if there are no adverse findings, then I cannot select, or not more than 1 audit engagement of the same engagement partner should be selected. So if there are no adverse finding, then not more than 1 engagement of the same engagement partner should be selected. Not more than 1 should be selected. Okay, if there is no adverse finding, then I should not select more than 1 for that particular engagement partner, or for each engagement partner rather. Okay. In case of any adverse finding in past reviews, or when I talk about adverse finding, that is in past reviews that I need to take care. So in past reviews, if there were any adverse findings, okay, any other situations, I can cover that firm into my quality review. Okay, I can cover a particular engagement or particular partner at more frequent interval. Okay, and I can select even what you can say, more than 3 audits also for that particular partner. But again, there should be adverse finding for that, or again that is dependent upon the board to decide how many engagement they can select. So generally there should be 3 engagements, and from that also, if there are no adverse finding, then not more than 1 should be of the same engagement partner. However, if there is any serious concerns, if there are any serious issues, reference has been made by the regulatory authority to the board, NFRA has made a reference, in that case more than 3 can be selected for a single partner also, but again that depends upon case to case basis. So there is a question that in earlier example, if the audit of this particular company, and this company has a share capital, paid up share capital, rupees 600 crores. Okay. Then tell me whether this company will be selected in quality review or not. Whether the technical reviewer can select this company under quality review if this company has a paid up share capital of 6,000 crores, that is more than 5,000 crores, 500 crores. This company has a 600 crores. Can this be selected under quality review? Can this entity be selected under quality review? Let's say statutory audit of ANL Private Limited, paid up share capital 600 crores and turnover, let's say 1200 crores. Can I select this entity under quality review? If you say yes, if you say no, then provide the reason. Correct, Manini, absolutely correct. Kaushiki, can you explain these conditions? Remember in my earlier, when I was explaining for NFRA, these are or this. This is not the and. This is or. Either paid up share capital, turnover, or debt. So you tell me, can I cover this entity? Can I cover this entity or not? Correct, Venkatesh? Okay. So those who are saying no, I cannot cover. See, the conditions just now I showed you are for unlisted public company. Private limited companies are not included here. So if even private limited companies satisfy these conditions, still they can be selected by technical reviewer under quality review. Simple. Because I'm talking about unlisted public companies. Those are covered by NFRA, not the private limited companies. I hope I'm clear. Okay. So only public unlisted public companies should have these details. If it's a private limited company, I'm not required to look into this. Okay, good. So I talked about AFUR, how I select the firms, cycle based. Then I select the engagement up to 3N based on the findings that I select those engagements. Clear? Any doubt with respect to this? Any doubt? Okay. Now I will be discussing about the quality review process. How the quality review being performed, how the board does, what is the procedure for conducting a quality review. Okay. Now, in the quality review process, there are few things you need to understand first as a terminology. One is TR, technical reviewer. Technical reviewer is a quality reviewer that is appointed by board. Then quality review groups. These are the groups formed by the board. Okay. They can be industry specific or generic also. So what happens is, first, the quality review board, okay, constitutes quality review groups. Those are known as QRG. Now these groups can be created on the basis of industry specific requirements or generic. They can be industry specific groups or generic groups. Now these groups, QRGs, okay, are created so that they can examine the report that is provided by the technical reviewer. Okay, so they review the technical reviewer's report and accordingly they take the steps. Now, in creation of these groups, the board can appoint members from the industry experts. They can be appointed from outside. There is no necessity those that group should be part made from the board itself. The group can have a different what you can say, people also from different sectors, different sort of industry experts. Let's say for example in our case, that report I was showing you, see I have a special invitee over here. Now they could be part of my any specific board. I just wanted to create a group, so they can be part of that group also. So I can have a specific person which are not part of the board, but they can be part of the group. Okay. Then the technical reviewers are empaneled. Now, selection of the technical reviewer. First of all, you need to qualify to be a technical reviewer. So if I talk about qualification, okay, for empanelment of technical reviewer. So what are the qualifications for the empanelment of the technical reviewer? The reviewer should have minimum 15 years of post-qualification experience as a chartered accountant and should be currently active in practice of accounting and auditing. So first is minimum 15 years of post qualification experience plus currently active in practice of accounting and auditing. Then reviewer should have handled as a signing partner, proprietor, at least 3 statutory audit assignments. So should have handled as a partner or proprietor at least 3 audit assignments. Okay. As a central statutory auditor of banks, PSU, government companies, private limited companies. But in case of private limited companies, the turnover should be more than 50 crores in last 10 years. So for private limited, my turnover should be, sorry, more than 50 crores in last 10 years. Then only I can count that private limited. Okay. Then, and out of these 3, out of above 3 audits, at least 1 should be other than private limited. Means all 3 should not be private limited, in other words. Okay. Then third condition is reviewer should not have any disciplinary proceedings under Chartered Accountants Act pending against him. Okay. Or should have not taken any disciplinary proceedings in last 3 financial years. So should not have any pending disciplinary proceedings or should not have any penal action under any law okay or pending action any under any law during last 3 financial years. Means it should not be current also, it should not be during last 3 financial years also. Then reviewer should not be member of quality review board, central council, regional council, then branch level management committee, okay. He should not be a member of quality review board, central council, regional council, branch level management committee. So then only he can qualify as a reviewer. So these are the criteria for the empanelment of reviewer under the quality review board. This empanelment of a technical reviewer is on ongoing basis for a block period of 3 years. So this is a block period of 3 years subject to annual confirmation or declaration with respect to the above ones. So every time, every year, he needs to provide a declaration that no pending action is there. He is not part of the council. He is fulfilling all the criteria. Okay. So subject to annual declaration of criteria, he will be empaneled for the block of 3 years. Then just one thing I want to note, highlight over here. Empanelment does not guarantee the allocation of quality review or quality review. Okay, engagement. That is not necessary that you have been empaneled means that you will receive a quality review engagement. So empanelment does not guarantee that the allocation will be done. It will be done on the so the board or the groups will be selecting the technical reviewer based on other criteria also. So that is the technical reviewers are selected or empaneled. Once the technical reviewers are selected or empaneled, then there is a all lot different process that are being followed, and I will be covering that process also. But till now, clear? Any doubt? So when I talk about turnover, it's a total turnover. Like that is the total turnover, not the average turnover. So total turnover less than 50 crores or greater than 50 crores in any last 10 years. In any of the last 10 years, if the total turnover exceeds 50 crores, then only that private limited will be counted. So board selects the technical reviewer. Then technical reviewer are selected by board, QRB. Any doubts? I hope that till this particular point it is clear. Okay. It is clear till this point. So we started with the quality review board, section 28 of the act, functions of the quality review board, amendment we discussed. We discussed the procedure, the areas that they refer to in quality review. Then we talked about audit firm selection criteria. Then we are talking about the quality review procedure. We talked about qualification and empanelment of technical reviewer. Any doubt till now? Okay. If no further doubts, what I'll suggest is let's take a quick 10-minute break. And after the break, we'll gather back and we'll continue. Okay. Let's take a quick 10-minute break. सर क्यों काम चले गए थे? हेलो 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 हाँ क्या हुआ, कहाँ चले गए थे? Hello everyone, welcome back. So let's continue with the topic. Okay. Now we discussed about the quality review procedure, wherein we discussed that okay, technical reviewers are selected by the QARB. Then we discussed that okay, what are the qualification for the empanelment of technical reviewer. Now let us discuss various phases in the quality review procedure or process. Now the quality review board selects the technical reviewer from the empaneled list. Then a quality review board forms the quality review groups, and quality review board selects the audit firm and the audit file for the review and identifies TR to conduct the quality review. So once they identify the groups and technical reviewer, or along with that, all the three are done together, they also select audit firms, okay, and the audit file for review. Then quality review board sends the engagement letter to technical reviewer that okay, this is the audit firm has been assigned for you for the technical review and you will be the technical reviewer. So the engagement letter sends. Okay. Technical reviewer then conveys his acceptance conveys his acceptance okay, of the engagement letter or letter of engagement to QRB, wherein he sends the necessary declarations that in eligibility condition, confidentiality regarding assistant. So along with this, with acceptance, he needs to send the following declarations. Declaration regarding qualification criteria, declaration regarding confidentiality, declaration regarding his assistant, okay. So all these declarations are submitted. Then quality review board takes this all information and intimates the audit firm under review about the proposed quality review. About the proposed quality review, okay. They send an intimation letter. A copy of intimation letter is also sent to technical reviewer. Okay, so that they can communicate with each other. So a copy of intimation letter is then shared with the technical reviewer. Then technical reviewer sends specified questionnaire for the quality review to the audit firm. Now that AFUR has to fill up, and then he needs to send back this to the technical reviewer. Okay, then then technical reviewer and his team, based on that, they carry out their planning, they perform their audit, and by offsite reviews, making proper planning of the review, they uh, decide the strategy for the review, compliance, then substantive strategy and everything. So technical reviewer then plans and execute the review. Technical reviewer then plans and executes the review, okay, by offsite and on-site review. By proper planning and everything that is there. Then on completion of the on-site review, technical reviewer the technical reviewer sends his preliminary report to audit firm under review. A preliminary report to audit firm under review. Okay. A copy is also shared with PR is a preliminary report. A copy is also shared with QRB, QRG and QRB. Okay. Then AFUR is required to submit representation to the preliminary report. And that is required to be submitted to the technical reviewer. Okay. Now, technical reviewer is required to send the replies to the QRB and QRG also. So, technical reviewer will forward the replies to the QRG/QRB. Okay, that he has received from AFUR. Now, technical reviewer is required to submit the final report along with the annual report of the entity for the year under review to the quality review board in a specified format. So what TR will do is TR will submit final report, then annual report, copy of annual report, okay, in a specified format on his letterhead, duly signed and dated by him. This should be, sorry, not this one, but specific the report. On letterhead of TR and duly signed by him, okay, with dated within the specified time period, or the time period that has been provided by the QRB. In addition, he will send the final report of the AFUR to the he will send the final report to AFUR and he will request AFUR to send them their final replies to the QRP within 7 days of receipt of final report. So AFUR then needs to submit their final replies. So what will happen is, now TR will send final report to AFUR and will ask them to submit their final replies within 7 days. To QRB, okay, not to him but to QRB, okay, from the date of receipt of final report. Then a copy of replies is also shared with TR also. A copy of replies is also shared with TR. Okay. So that is shared with the TR also. Then upon receipt of final reply from the AFUR, TR is also required to submit within next 7 days a summary of its finding. He will then, TR will submit the summary of his findings okay uh, based on the reply that has been received by TR within next 7 days. Okay, within next 7 days. So that reply is submitted. Next 7 days of reply. Once he receives the reply, he needs to submit summary of his findings, wherein he will contain. He will have details upon finding, technical requirements, reply of AFUR, and his final comments thereon. Then QRG, that is a group that has been consisted of maybe of council members, board members, or any external third person. So that particular QRG will consider the report of TR, responses of AFUR, and will make recommendations to QRB. So QRG will consider the following: for making their recommendations to QRB, that is final report, replies, of AFUR, summary of findings submitted by TR. Okay, so they will consider all these things and they will recommend to QR, prepare their recommendations and will send them to the QRB. Okay, then QRG may call for additional information either from TR, either from AFUR, or for their additional details. So QRG may call for additional information from TR/AFUR. Okay, they may call additional information to recommend the to prepare the recommendations for the board. Now then QRB will consider the recommendations of QRG. So that is a process that is followed for the quality review. From appointment till final report. This is how the process works. Any doubt? Any doubt? So this is the whole process. Any doubt? Then see, AFUR is required to submit representation to the preliminary report to the TR. TR will forward replies to QRG. TR will submit the final report. Okay. Then TR will send the final report to AFUR and will ask them to submit their final replies within 7 days to QRB. Okay. So TR will ask that AFUR that please submit your reply to the board, not to me, but you send me a copy to me also. AFUR is required to submit the representation to the preliminary report to the TR, and with respect to the questionnaire, yeah, it will be to TR. Sorry. And AFUR will send back the questionnaire to TR. Okay. Yeah. Thank you, Manani. Any doubt? Any doubt till now? Okay. Now, see here, what I want to highlight is so the technical reviewer, as I said, that he is required to submit independence and qualifications declarations. So when a work is assigned to of a quality review to the respective technical reviewers, okay, in order that they should be independent, they should be they should be eligible to take the work. They are required to demonstrate that they are independent. They are out of the conflicts. There is no conflict of interest, and for that there are certain things that they need to comply with respect to the independence. One, as we discussed, there should not be any disciplinary proceedings against them. Number two, he or his or her firm, okay, or any of the network firm where he is a partner in that firm, okay, should not have been statutory auditors of the company, as of that particular company, or they should not have rendered any service to the entity during last 3 financial years. So that is very important for a technical reviewer, so that he will be able to conduct his review independently. Third, he or his firm or any of the network firms or any of the partner of the firm, okay, or of that particular network firm should not have any association with the specified AFUR during last 3 financial years. So they should not be associated with the entities. They should not be associated with the FR, AFUR. Then he should comply with all the eligibility conditions laid down for appointment of auditor under section 141 of the Companies Act. For the review of review of the quality of statutory audit of the entity. So let's say, for example, I am starting a quality review for a particular entity. In order to start the quality review for that particular entity, I needs to satisfy the eligibility criteria that we discussed earlier plus 141. So even to start the quality review, I need to satisfy 141 of the Companies Act. Then the last is he should not belong from the city, region of the head office of AFUR. So these are the conditions that a technical reviewer is required to adhere to demonstrate his independence. So how he will demonstrate? No disciplinary proceedings under CA Act should be pending against him. Or any penal action under the law should have not been taken during last 3 financial years. Okay, so he should not be having any penal proceedings under CA Act or any law against him, and he should not have part to a penal action. Okay, or any penal action should have not been taken against him on him during last 3 financial years. Second, his firm her or his firm, okay, then any of the network firms or any of the partners of the firms or of that of a network firm. So any partner of above firms he or she, his or her firm, any of the network firms, or any partner of the above firms, that's a network firm or his or her firm, okay, should not have been statutory auditor of the company of the company, okay, or should not have rendered any service, any other service, to the said entity during last 3 financial years. Okay. So his firm or his network firm or any partner of the above firm should have not been a statutory auditor of the company or should have not rendered any service, okay, to that entity which is, during last 3 financial years. Then only appropriate independence can be demonstrated. Clear? Okay. So I'll discuss one question and then we'll move forward. Mr. X was selected technical reviewer for ABC Limited. Okay. He was selected technical reviewer for ABC Limited. Mr. X was partner of XYZ and company and his firm was part of XYZ network firms okay. One of the network firm, that is XNZ and company, was statutory auditor of PNS Limited. Okay, statutory auditor of PNS Limited, a subsidiary of ABC Limited. Now, on the basis of this information, you tell me whether Mr. X can be eligible to be appointed as a technical reviewer for ABC Limited. Now, one of the network firm, that is XNZ Limited, was the statutory auditor of PNS Limited, a subsidiary of ABC Limited. You tell me whether Mr. X will be eligible to be appointed for that particular entity. So let's say he was selected for, FY 21-22 and Here the statutory auditor were since last 3 years. Okay, and they were there in FY 21-22 also. Whether eligible or not. So Mr. X is a partner of XYZ. XYZ and XYZ and company was a part of XYZ network firms. XNZ, one of the network firm, that is XNZ and company, was the statutory auditor since last 3 years of PNS Limited, a subsidiary of ABC Limited. Correct, Boni. Okay, Manini. Okay, Shailendra. Come on, guys. Come on. Pretty simple. Pretty simple, guys. Okay, so in our case, I discussed he, she, his firm, or any of the network firms, or any of the partner above firms should not have been statutory auditor of the company, or should not have been rendered any service to the entity during last 3 years. Okay, so he should not have rendered any of such service to the entity. Now, I did not say to the subsidiary of the entity. I only use the word entity. Like, I'm pretty much clear. Entity, not the subsidiary. And hence, if any of the network firm is dealing with the subsidiary, then it is fine. So here in the current case, it's a subsidiary, not the entity itself, and it's perfectly fine. He can be a technical reviewer of that particular entity. But again, he should demonstrate that there is no conflict of interest. However, there is another point that I want to highlight over here. That is that is he. What you can say, what I can say is that person or technical reviewer, the subsequent condition is he should satisfy 141. Subject to the 141 of Companies Act, fine. If he is not able to satisfy the conditions specified under section 141, then he will not be eligible, although these conditions are there. So let us see rest of the conditions. then she or he, his or her firm, okay, or any of the network firm or any of the partner of the firm any of the partner of above firm, okay, should not have any association should not have any association with the specified audit firm under review, okay, during last 3 financial years. The fourth condition is that he or she, when I talk about technical reviewer, okay, they should comply with all the eligibility, all the eligibility conditions laid down in section 141(3) of Companies Act, okay, laid down under section 141(3) of Companies Act in respect of the quality of the statutory auditor, in respect of the review of the quality of statutory auditor, statutory audit of the entity. So means that he should comply all the eligibility conditions of 141(3), okay, in respect of his review of the quality of the statutory audit, that is the quality review we are talking about, okay. So if he is going to perform quality review for the entity, he should satisfy all the conditions of 141(3). Now if you go to 141(3), there are various conditions A, B, C, D, and I can show you that we discuss in few lectures back. So 141(3) not eligible for appointment. So he needs to satisfy all these conditions. He should he should not be a body corporate other than LLP. He should not be officer or employee of the company. He should not be partner who is in employment of the officer or employee. A person who or his relative or partner should not be holding securities more than 1 lakh in case of relative, in debt to the company, but limit of 5 lakh for the relatives. Guarantee in case of relative, the limit is 1 lakh rupees. He should not have any business relationship with the company holding subsidiary, directly or indirectly. Then there is one more condition, that is a person who is directly or indirectly rendering any service, okay, to the company or its holding company or its subsidiary company, which is referred under 144. Okay, then that person will not be eligible, for appointment of statutory auditor, or he will not qualify as eligibility conditions. So a person rendering directly or indirectly services referred under section 144 to company, holding, or its subsidiary. Now, in our case, the example that I was discussing, I can say that Mr. X indirectly, okay, indirectly through X and Z and company, okay, indirectly through X and Z, and Z and company is rendering stat audit service to subsidiary of ABC Limited, but my condition was services specified under 144. Okay, services specified under 144. And if you go to 144, stat audit is not part of 144. It's accounting, internal audit, design implementation, actuarial investment, and all those things. So that's a non-audit service. Here I'm talking about stat audit service. So he will not fall under the category of this particular point. That is, a person rendering directly or indirectly services referred under 144 to the company, holding, or its subsidiary. He's not rendering an 144 service. He's doing statutory audit. Okay. So in that case, if he satisfies all the condition of 144.3, that is, he's not in debt, he's all those such conditions. Okay. He's not elsewhere in partner, he's not convicted by court, all such conditions, then he can be eligible for being appointed as a technical reviewer of ABC Limited. In the current case, this will not impact my appointment. This will not impact, as this is not section 144 service. Clear? Any doubt? So let me take one more example. Mr. X was, so I'll remove this. I'll copy the first part from here. I'll update the second part accordingly. So Mr. X was selected technical reviewer for FY 21-22 for ABC Limited. Mr. X was partner of XYZ and Company, and his firm was part of XYZ network firms. Now, X and Z and Company, one of the network firms. Okay. So X and Z and Company, one of the network firms. One of the network firms was providing ESG reporting advisory service. Okay. ESG reporting advisory service to PMN Limited, associate of ABC Limited. Okay, of ABC Limited. In FY 21-22, XNZ and Company charged rupees 50 lakhs for their advisory service from PMN Limited. Okay. So now tell me whether Mr. X is eligible or not. So Mr. X is eligible or not? Okay, good, Manini. Consider this service being covered under Section 144. I tell you, consider this service is being covered under Section 144. Consider this service is being covered under Section 144. Okay, good, Gita. So in this case, see what is the condition is. I'll explain you. To be a technical reviewer for an entity, okay, which is selected under quality review of an AFUR. Like for example, there was there was a AFUR audit firm under review. I selected certain entities and I'll do quality review of that entity. Now to perform the quality review of that entity, I need to check whether I'm independent or not, or I'm eligible or not. So to check independence, with respect to that entity. I'm not talking about AFUR. I'm not talking about AFUR. I'm talking about independence with respect to that entity. To check the independence with respect to that entity, TR needs to fulfill requirements of section 141(3). Like he needs to assume that, okay, if I would have been appointed as an auditor of that particular entity, then 143(1) I used to be, I was supposed to comply. But to perform the quality review of that entity also, I need to comply 141(3). Means I need to exclude all those situations that I in any way can be related to a company. In other words, to be a quality reviewer or technical reviewer, he needs to comply with the 141(3) conditions. Okay, TR needs to fulfill requirement of 143(1) that he was supposed to be an auditor, but he is technical reviewer. Now, one of the condition of section 141(3) says that one of the condition of section 141(3) says that the person should not be, okay, again, so what the condition says, the person, like in our case it is the quality reviewer, the person who, or let me present here the condition in itself. Okay, this is the condition. Okay, a person, in our case person is a technical reviewer who directly or indirectly, this is a very important thing, directly or indirectly renders any service referred under section 141 to company, its subsidiary holding company or subsidiary company. That person, okay, that person is not eligible to be appointed as technical reviewer. Simple. Now there are two things. One is a service. Let's say our service is ESG. Number two, directly or indirectly. This directly or indirectly is defined under section 144. Okay. Now, if you go to 144, there are detailed explanations given. What do you mean by directly or indirectly? I'll put it over here. Okay. For the term directly or indirectly shall include rendering of service by auditor. Okay. Or auditor, in our case, it will be technical reviewer. So directly or indirectly will include that in case of a technical reviewer, wherever auditor is written, you need to assume it's a technical reviewer because we are looking from the technical reviewer point. In case of a technical reviewer being an individual, either himself or through his relative or any other person, again, any other person connected, associated with such individual, means individual means over here technical reviewer through any entity whatsoever in which individual has a significant influence or control or whose name, trademark, brand is used by such individual. Second, in case auditor being firm, in our case it will be a technical reviewer. In technical reviewer being a firm, either itself through any of its partner, through its parent, subsidiary, associate entity, through any entity whatsoever in the firm of any partner of the firm has significant influence or control, or
whose name, trademark, brand is used by the firm or in any of the partners. So here, our network firms are also considered. So means if in case of a technical reviewer, if he either himself or through any network firm provide the services, then it will be counted as the indirectly, directly or indirectly, and it will be that okay, technical reviewer directly or indirectly is rendering any service to referred into section 144 of the company or its holding or subsidiary. Okay, that is the condition of 143, 141.3. Again, associate is not included. Associate is not included. Hence, in our example, what I told you, in our example, XYZ, XNZ company, one of the network firms, was providing ESG reporting advisory service to PMN Limited, associate of ABC. Although I'm directly, indirectly providing a service, but am I providing to holding? Am I providing to subsidiary? Am I providing to company? Answer is no. There is no problem with 141.3. There is no problem. I can be appointed as a technical reviewer. So in this case also, yes, he can be appointed. He can be appointed as technical reviewer. Clear? Any doubt? Any doubt till now? How the things are working? It's not only one section which is coming into the play. It's 141.3. It's 144. And then you are going back again to the 141.3 and then you are applying the answer. Associated means either he should be, like either one of the partners or, he should not be a part of the network firm. They are not providing services. Associated, means they should not have any connection, business relationship or something like that. That's the associated. The word associated as of now is not defined, but you can take it into a common parlance that, okay, how associated would mean. And we are talking about independence. So any kind of association will impact the independence. The last condition for the independence is he does not belong to the city / region of the head office of AFUR. I should not be from the same city or region. Let's say AFUR is situated in Mumbai. The technical reviewer should not be from Mumbai, should not be from Western region. Simple. Any doubts? That was the technical reviewers independence requirement. Very important. Very, very important. Okay, so there is one question. The maximum limit of one engagement is to be selected if in past year no adverse finding. So maximum limit of one engagement is for per engagement partner of audit firm. Okay, I can select 3 entities from an audit firm, but one part for one entity for one partner, second entity for second partner, third entity for third partner. If no adverse finding, I can select more than one entities, that is 2 entities audited by the same audit firm, but partners should be different. Any doubt, guys? Okay. There is one last area that I want to cover. We discussed that, okay, QRG will consider the following for making recommendations to the QRB. Now, what QRB will do with these recommendations, that is, we need to understand. So, actions that are taken by QRB based on the recommendations. So, based on the recommendations, the following actions can be taken by the QRB. One, make recommendation to council. Okay. To refer the case to the director discipline. Of the institute for consideration of necessary actions. So they will refer the case to the director discipline. Second, issue advisory. Issue advisory and guidance to AFUR. Okay. Like for improvement of the quality of surveys, that you should other this, you should other this. And a copy is sent to ICI for information that, okay, advisory was issued to this firm. Then third, inform the non-compliance to regulatory bodies. Okay, that may be relevant in the case. Fourth, intimate AFUR AFUR for the actions that are what you can say initiated and the findings of report. You need to intimate AFU. They can intimate AFUR for the actions initiated and the findings of report. So then, in case, remember, we can say that, okay, at the selection criteria, one of the criteria was if the case has been reserved by any regulatory authority. So if the case is due to reference or, case due to referred by any regulatory authority, then inform the result of review to that authority. Okay, that you asked us to do a quality review. We have done the quality review and this is the result. And the proposed action to be taken. Or last one, consider the review complete consider the matter complete or review complete, and inform AFUR, because it can be happen that okay, no issue was identified and matter complete, quality review done, closed. That is. So consider the review complete and inform AFUR. So these are the actions that can be taken by QRB. And it's not like that they can take any one action. They can take any of them together also. So it's not like that they can take only one action. They can take all of them even. So that depend upon the QRB, quality review board. Okay. So that is something with respect to the actions that can be taken by the quality review board. Clear? Any doubt? Any doubt? Okay. Next lecture is due diligence, investigation, forensic audit. Okay. And in next lecture, we will be discussing about, brief of due diligence, investigation, and forensic audit. Okay. So guys, be prepared with that lecture, that chapter. I will be discussing in detail with questions. Okay. I will be explaining you the difference between due diligence, investigation, and forensic audit. Again, my more focus will be on the, practical examples rather than the, the theory based. But I'll try to cover as much as practical possible. Okay. Then please be prepared and revise this also. Prepared for the next lecture. That is very important. Also, do provide your feedback. That is very important for me. Very important from me, because I can understand whether you need any change, you are liking, you are not liking, you need something further. That is very important for me to understand, okay, whether you are getting the things or not. So please provide your feedback. That is something important. Revise this before start of next lecture. Have a read of that particular topic. Okay, and I will be discussing that particular topic in the next lecture. If no further doubts, then I propose to close this particular lecture, and I'll see you in the next lecture. Okay, thank you guys. Thank you. Have a nice day. See you in next lecture.